All right, so, I mean, what's going on when it comes to the supply chain? We know what's going on when it comes to the administration and what they're saying about Iran, but when we're talking about companies in the supply chain, how are they viewing this whole tension and this conflict right now as when it comes to shipping not only oil, but other products?
Well, they're veterans at dealing with instability and chaos. And so this has been something, if you think about it, we've been in a level of chaos of supply chains really since Donald Trump's first administration. We had the first trade war. We had the first set of tariffs, and then we've had COVID. We had the freight recession, and now we've had the second round of tariffs, and now we have this issue. So this is something that the industry is dealing with, has dealt with, and is prepared to deal with.
So one of the things that we've been talking about throughout the show is that really great interview from Meet the Press with Vice President J.D. Vance, where he said the uranium enrichment, that's the red line, not necessarily blocking the Strait of Hormuz. When we're talking about the potential for U.S. involvement there, what does that do to not only prices, to perhaps surcharges that some of these companies might charge, and overall just the cost when it comes to companies that want to ship goods?
Yeah, I mean, the big impact here specifically is on oil shipping, is on energy shipping. So that's really where I think the pressure will be. But really, it impacts China far more than it does the United States. China receives the vast majority of its largest level of imports are from that area of the world, where the United States only receives 5%. So it's far more drastic to China than it is to the U.S. And so the question is, does the U.S. actually benefit as a net beneficiary of actually closing the straits? Some people could argue that because U.S. has such a large level of oil exposure that it very could be that the United States doesn't get impacted drastically and may even benefit as a country from the closure.
It's interesting, Craig, because we had you on before a couple months ago. I mean, it was probably about a year ago or so, and we talked about, issues in the Red Sea, raising the cost of just about everything, perhaps leading to supply shortages. What's happened? Why are we looking at that risk just as seriously now?
Yeah, I mean, look, I think generally anytime when we're talking specifically about container shipping, because I think really the risk of closing the Hormuz is really related to energy prices. But when you look at the Red Sea and you look at, we're talking specifically about container issues and the fact that this could impact container prices, both on shipping costs of transportation, but also on the goods that flow through there. But this is something that has been the industry's been dealing with. The Houthi attacks have exposed a lot of that, and a lot of the international container ships have actually sailed around South Africa to avoid going through an exposed area. And so I think this is something that the industry is prepared to deal with. One thing that I would say is the container ship lines have never missed an opportunity to actually exploit a crisis, but providing high surcharges. Right. So again, I think the supply chain industry is prepared and ready. It could impact consumer prices, but here in the U.S., it's far less of a concern.